All right, I'd like to call the Budget and Finance Committee meeting to order. Do I have a motion to accept the minutes from the last meeting? And a second?
Second. Oh, wait, I'm not on the committee.
You're not on the committee. We have a second? Okay.
Just trying to help.
All in favor, let it be known by saying aye. We'll continue to take time. For the record, we have all members present except for Ms. Amobian and Mr. Hoke. We will continue to take time on the one piece we have on the old agenda, and then I believe we have one new piece. It's an ordinance authorizing the Director of Finance to advertise for bids through the Office of the Purchasing Agent and to enter into a contract or contracts for the purchase of public employee dishonesty and crime insurance for all city employees, approving specifications thereof, and declaring an emergency. Who will be speaking, please?
I'm going to defer to the purchasing agent.
Thank you.
Thank you, Mr. Chairman. This is just for the employee dishonesty and crime insurance. We bid this out every 3 years. It's for approximately $35,000.
Okay. Any questions or comments from, we'll begin with committee members. Any questions or comments? Oh, yes, Ms. Keith.
Can you explain this to me? Does this mean I don't have to go to confession anymore? Or, I mean, really, what does this cover? I'm sorry, I really am clueless.
This covers stealing of funds, falsifying records, taking equipment, furnishings, anything that the city owns, and taking it with them when they leave. That's some of the things that it covers.
May I, Mr. Chairman, ask a follow-up question?
Please.
Okay. So this is insurance protecting the city against that, not necessarily the employee that's doing it. Okay, because I was reading that wrong.
The city would be reimbursed for a bad act that our employee
Absolutely.
might do.
Okay, thank you so much.
Other comments or questions from any council person? What will be your pleasure? Is consent okay?
Yes.
Okay. Do we have a motion for consent?
So moved.
A motion and a second. All those in favor of placing this item on the consent agenda, let me know by saying aye. Aye. All right. We'll see that's placed on the consent agenda. And now at this time, we are going to enter into our operating budget hearings. Just a couple items. We will be meeting this evening at 3, which is right now, obviously. And then for the 3 consecutive days, Tuesday, Wednesday, Thursday, meeting in these chambers, 3 p.m. each and every day. As in about the past 3 or 4 years, we will be asking that all questions that are given please pertain to the budget. And I know, because I'm the biggest offender, it's easy for me to have the sanitation department in here, to have somebody from public service, and I want to ask a question about something new they're doing or why they didn't fix my chuck hole or something. I'm going to ask that all questions please be around the budget, and we would invite any and all members that are present, any subsequent questions you have, that you would save them for correspondence with the department head at a later time, but just to keep ourselves on track. So we will begin these operating budget hearings, and I think I'll defer to Mr. Fricker. Thank you.
Thank you, Mr. Chairman. So in terms of the budget books that we have traditionally provided, this year it will be provided in the form of a PDF file, which will be mailed to each of your mailboxes this afternoon.
Thank you very much for doing that.
A big PDF file. There will be a bookmarks within the PDF file so that you can jump to the different sections for each budget. So there will be bookmarks for each department. So you don't have to wade through all the various pages to get where you want. You can just click on that link and it will take you there. And then you will be getting a second document which contains the goals and objectives for each division. So we thought we'd do those in separate books rather than mixing it all into the one giant book this year. We just thought that would make it easier, so you'll be getting 2 separate files for that.
Excellent. So each council member will want to make sure and bring the iPads so we can stay on track with you. Thank you for doing that, though.
Okay.
We thank you, the force thanks you, so.
Welcome. Before you should have a 2018 budget plan executive summary. We're going to briefly go through that today. This provides the assumptions that we're making for this year's budget, along with the current numbers that are budgeted, and which will be contained in your PDF files that we send out this afternoon.
Thank you.
Okay, so on the first page, we have our revenue and expenditure assumptions. So for revenues, we are forecasting our income tax revenues to increase by 2%. If you remember last year, we had a down year in terms of our income tax collections. They were down about 2.3%, after having a very good year the year before where we were up nearly 4%. So we think that's part of the reason that we had a slight decline, is because we had such a good year in 2016 that it was kind of hard to live up to those increased collections. So we did have a down year last year. We are expecting to bounce back from that this year and have growth of about 2%. Now, the 2% does not include the issue 4 funds that obviously the tax collection should increase due to the extra 0.25% that's being levied. That's budgeted for separately, and we created a brand new fund for all of the issue 4 funds called 2017 Income Tax, Police, Fire, and Roads.
So we should safely assume everything we look at, unless you hold up the sign and say, okay, now we're talking about the 0.25%, that's all going to be different account and.
Right, yeah, so there will be 3 components to the income tax now. The basic income tax, which is the 2%, the CLC tax, and then the issue 4 tax.
Okay,
And just keep in mind the January report that we sent out quite recently, we had like the basic 2% at the top of the page, and at the bottom of the page, we listed how much was CLC and how much was issue 4. We are going to continue to do it that way.
Good, thank you.
Right. One thing I want to make everyone aware of, that the issue 4 taxes, even though they're a 0.25% and the CLC tax is a 0.25%, the issue 4 tax will not be as much as the CLC tax due to the fact that it's only levied on tax years 2018 and beyond. Whereas the CLC tax, some of its collections will come from prior years 2017 and earlier. Okay. So we don't get the full benefit of that extra 0.25% in the first year, because some of the taxes that we collect this year are for 2017, and then even some from earlier years.
2019, though, things will.
Correct. It should go up quite a bit in 19, yes.
Mr. Chair.
Yes, Ms. Movie?
Are we to ask questions as we go, or you want us to wait to the end?
You can ask questions as we go.
What are you forecasting the increase by 2% on? The projections, what are you basing it on?
We're basically basing it on the general inflation factor in, cost of living increases that most employers are giving. It's typically 2 to 2.5%. We're being pretty conservative at 2.
Most of the income that we receive is on income tax. Is that correct? General.
Yeah, talking.
Correct. That's our largest source of
Are we
general fund.
forecasting something different in that area?
I'm not sure I'm following. I mean, the income tax growth for the basic income tax, we're forecasting at 2%, 73% of which is distributed to the general fund.
But we're starting off real down from our projection so far, what we've collected in January.
But again, January doesn't always tell the full story.
Right.
It's pretty early in the year. We're hoping to see that number start to move up.
Okay. So you don't have any solid evidence, you're just hoping that we can increase it by
Just based on what's happened in the past.
Okay, okay, thank you.
Yeah, 16 was, that was an unusual year.
That was a great year, yes.
Okay, so that's the income tax assumption. The local government fund, we do expect a slight decrease based on the state forecast that is out on the Ohio Department of Taxation website. As you remember, we used to get upwards of $14 million in this category. Now it's down, around $6 million. Last year, the state made a change where a portion of the local government tax that used to be distributed directly to cities was redirected towards townships. So that was a loss of about $300,000 to the city of Akron last year. So last year we collected about $6,276,000. The forecast this year is for about $6,179,000. So we're expecting about another $100,000 drop in the local government local government funds. Property taxes. I'm sorry.
Pardon for just a moment. I'm going to ask the committee members too, in case my peripheral vision is not real well. Feel free to, don't throw anything, but just shout out at me.
Just a quick question. I understand, and I assume you guys have been watching this. There is I've seen an email reference, local government fund paving from the state of Ohio. Have you seen that? If not, I will forward it to you.
Okay, yeah.
There was an announcement, I think it was last week or the week before, whereas resurfacing paving from the state of Ohio referenced local government paving.
Okay, yeah, I'd appreciate if you'd forward that.
I will.
We don't know if that would be in this local government that you're talking about right now.
Yeah,
Okay.
Somebody else.
the state actually does a projection for each city and each county within Ohio, which we're basing our revenue estimate on.
Okay.
Property taxes, we expect to remain stable. We did see a slight growth in our assessed valuation last year, which is the first time that's happened in several years. So we are encouraged by that. So we're expecting a similar property tax revenue collection amount to what we received in 2017. We are not budgeting for any increases in water or sewer rates in 2018. So those will remain stable. And then we will continue to examine all of our fee and license revenue sources that we collect, both within the general fund and other funds, to see if there are opportunities to bring in some additional revenue there. We have a number of fees and fines and things that have not been modified in over 20 years. So we think that there are some places where it would be appropriate, based on the additional costs that we've incurred over the past several years, to increase some of those. And we will be examining those opportunities.
Has the law department been brought into any of that yet, or are the various?
Yes, I mean, we're looking at things. There are some that will require council's approval and others that do not, and we're looking at all of those different revenue sources.
Okay, thank you.
On the expenditure side, we are in the third year of our current labor agreements with all four of our unions. If you remember, the labor agreements called for 3% wage increases 2 years ago, 2.5 last year, and 2.5 this year. So this is the final year of that agreement. All city employees will have a 2.5% cost of living increase. Our health care costs, we are projecting last year, we had enough revenue on our self-insurance fund to back off part of the charge that we did back to the departments to pay our claims, our medical claims. This year we are forecasting a full 12 months of reimbursements to our self-insurance fund, so those should go up slightly in 2018. The main highlight, especially for our general fund budget this year, is this budget is really a safety forces heavy budget. So as you'll see, the general fund, we're budgeting about a $2 million increase, but police and fire, we're budgeting increases of $2.5 million between those two divisions. So everyone else went down about $450,000, and police fire are going up by $2.5 million. So we are funding our safety forces. That's our primary goal in 2018. And we will be hiring additional police officers and firefighters. Fire recently brought on a class of 21 recruits. That's going to put them up at 370 uniformed firefighters, which is a net increase of 7 versus what we budgeted last year. So fire's going to be at the highest strength they've been in several years. Police, we are budgeting 455 sworn officers. That's the same amount as last year.
How many again?
455.
And how many fire?
370.
Are we close to that now? Either one of those numbers?
Fire is right there because they just brought on a brand-new class. Police has several. They have, I think there are 21 that are going through the hiring process right now. So police is bringing on some in the near future. Okay, so, and we'll cover the general fund in more detail here shortly. And our final assumption is 2018 has kind of a unique challenge that we have a 13th pension payment, and it's just kind of the way that the calendar fell over the past 3 years, where 2 years ago we actually had only 11 payments. We had 12 last year, but we knew we were going to have to make that 13th pension payment at one point, and it's going to be in 2018. So, and that's about a $3 million increase for the city to make that extra pension payment.
Mr. Chairman.
Yes, ma'am. Yes. Go ahead and use my mic here.
Thank you, Mr. Chairman. We got kind of passed it really quickly. On the hiring of police officers and firefighters, I think at the beginning we talked about with 0.25% income tax, we wouldn't realize the bulk of that share of that in 2018. We see it in 2018. 19?
Well, we won't realize the full impact of the 0.25% in 2018 because. As I said, a lot of the, I shouldn't say a lot, a portion of the taxes that we collect each year are for prior years. So, for instance, the people that have to pay when they file their return, you know, right now people are filing their 2017 returns, and some of those people will owe. Those 2017 taxes that they pay us this year will not be subject to the issue 4 tax because it was levied in 2017. Okay. So that's why. And a lot of that will roll off after this year, and we'll be getting the full benefit of that extra 0.25%.
And even though it went up on January 1st, that money we typically don't see until February. So we'll have 11 full months of income tax, not 12.
Yeah. So the bulk of our tax collections are withholding from the employers paying us withholding tax, so we're only getting 11 months of that this year.
Thank you.
As opposed to sometimes we'll pass a piece in November, and we're passing a tax, giving the city permission to tax us. We're back to January. Is that not correct?
We haven't done that, but
But I think I've seen it done before. Okay, but yeah, so the issue 4 starts January 1.
starts January
Correct,
1st.
yes. The next page is just a kind of a summary of the different line items that you'll see on the PDF file that we send you for each budget. So it just gives you a description of the types of expenses that are included under each of those line items. So this is just something that you can refer back to if you have questions about the types of things that are charged in each of these categories.
Is there a PDF of this coming out as well?
Yes, we will forward this as well, yes.
Okay, thank you.
Okay, page 3 is an overview of the general fund budget. So I'll briefly go through the revenue assumptions. We are showing an increase in the taxes, assessments, and JED revenue of almost $6 million. Now that's basically from a few different sources. So one, we are projecting 2% growth in the income tax. We are also, as we mentioned before, we are using a portion of the issue 4 funds to support the staffing levels in our police department and fire department. So we're using $2.5 million of the issue 4 funds for staffing. So that will be a part of our general fund taxes and assessments category. And then finally, because the income tax increase also applied to the JEDs, we'll also have an increase in the JED revenues that we collect, which will be available for operating within the general fund.
And again, important to note that there's not been any decrease in police from what they were budgeted before. You said there's going to be, would you say 2.5%? You said a certain percentage is going to be used to staff a couple positions.
Right.
But we didn't decrease that budget by anything
Their
whatsoever.
budget is higher
Yeah,
than
their
it was
budget is
last year.
higher,
Okay.
and collectively, the rest of the departments within the general fund are lower. Yeah.
We all want to know that because people ask us those questions. So, do I have a question from over here?
Yeah, could you explain what you just said about JED? Repeat it.
So per the JED contracts, if Akron ever increases its income tax rate, then the JEDs would be subject to that same increased tax rate. So the 0.25% increase will also be levied in the JED districts as well.
Thank you.
Yes, Mr. Sims?
Thank you, Mr. Chairman. I may have been, made me my own misunderstanding. Now, when we did the levy piece, as far as staffing is concerned, did we talk about staffing maintenance, or did we talk about hiring new staff using the quote?
We talked about maintaining staffing levels within safety forces.
Is that new hires?
It's hires, it's maintaining staffing levels. So it's keeping our police and fire departments at the levels that we've been funding over the past couple of years.
Okay, so I don't want to play semantics a little, so excuse me if I keep asking you, because the question is asked us. Are we saying right now, we're at 85% capacity in the Akron Police Department? Are we saying we want to maintain 85%?
We're saying that, so for instance, in police, our budgeted number over the past couple of years has been 455 officers. Right now, I think we're at 433, about there. So we're maintaining the 455. So we're maintaining the level that we've been for the past couple of years.
You have 430. but
Right,
you-
and we're hiring 22 officers. I think there's 21 that are kind of in process right now.
Okay. I'm gonna try one more time this last time. So ideally, we would have had 455 officers,
Right.
right? But last year, we had 430.
Yeah, no, we budgeted 455 last year, and at one point, we had close to 455,
Okay.
but we have officers leave all the time. In fact, last year, we had a very large number of officers that retired.
So maintenance wasn't what we had, but what we budgeted for.
I think when we looked at maintain, it was to keep the budget numbers stable.
Good. I guess I was just a little confused, and I won't belabor it here. I'll maybe ask you
Okay.
a little closer look.
But we can talk offline if you'd like.
Thank you.
Okay, so yeah, that's our primary revenue assumption is the increased tax, the JED revenue, and then we are using a portion of the issue 4 funds within the general fund there. On the expense side, you're going to see an increase in the labor costs from 72 million up to 77 million. That's also for a couple of different reasons, and a big part of that is last year we had 22 police officers that were charged off to grant funds in terms of where they were actually charged. Now, we did have to support those from the general fund with a revenue transfer. So you're going to see a corresponding decrease in that interfund service charge number down at the bottom. But this year, those officers are going to be charged directly to the general fund because the grant has expired.
Does that happen on fire, too? Do you have firefighters that,
It has happened.
It has happened.
But not
Yeah, I don't
currently.
think, not this year, right. Yeah.
yes.
So we still do have a SAFER grant in place for the fire department that is funding 25 firefighters.
Mr. Chair,
Yes. Ms. Mobley.
so we accept these grants. We accept them under the condition that when the funds run out, that we will be in a position to maintain these
Correct.
employees?
Yes.
You don't have an option?
Most of the grants require us to maintain.
Right.
Okay. Is this the actual at the top? Is this 2016 actual?
Yes.
Okay, just want to make sure. So, can I ask another question?
Sure.
Mr.
Sure.
Chair? When we passed that 0.25%, did we indicate at all that we would be increasing the number of members of the safety forces? Was there an increase in the projection of?
I think we said that we potentially would use some of it to maintain safety force levels.
And do we ever give any indication of what levels we were talking about? Because at one point, we had more officers than we currently have.
That was years ago where we
Yeah.
had more. I think we were really looking at the 2017 budgeted number, and the commitment was to try to stay there.
At 455.
Yes. But that's the current commitment. I mean, we're going to be collecting that 0.25% for many years to come.
So you hope that we can increase?
That would be a
gradually?
goal.
Okay. So there was no real commitment that we would be doing that right away? Okay.
And part of the money, is, I mean, we're going to replace some cruisers. And
Yeah, we have capital needs that outweigh the operating needs at this time.
Yeah, the vehicles and all of that.
Yes.
Okay.
Okay, the fringe number, as I mentioned, because we'll be doing a full 12-month of charges, that is going to grow slightly within the general fund. And those are the chargebacks that are self-insurance fund charges back to the departments to pay our medical claims. The current expenditures other, that's an area that we've tried to focus. That is kind of the bulk of the contractual supplies, materials, maintenance, those types of expenses, travel. So we've been working hard to cut those, and you see that we did cut those expenses in 2017, and we expect to cut them further in 2018. And then in terms of other highlights, down at the bottom, I mentioned that that decline in the interfund service charges. So again, a big portion of that is the change that we made in how we funded the police officers that were formerly charged to the 2 cops hiring grants that we had. And then the bottom line is our general fund budget that we'll be talking about this year is about $168.8 million.
I have to ask the question, I need to have debt service explained a bit more.
The debt service in the general fund, that's not our big debt service for capital projects.
Okay.
That's typically for the leasing of vehicles and things
Okay.
like that.
Okay.
Mr. Chair,
Yes, Ms. Mobian?
when we look at the current expenditures, this is across all departments?
In the general fund.
In the
only.
general fund, yes.
Okay. Do we have a list of those things?
It's the page before, kind of list out what is included in that category.
Right. As we go through the numbers in the 3 days of budget hearings, all of that will be differentiated in terms of the departments. So every budget that you look at will be a specific fund and organization combination. So, and as you remember from last year, we have around 200 budgets that we'll be looking at. I think there's 180 this year. So there's a lot of different combinations of things that we budget.
But if you go back to page 2 and look at direct expenditures, it's contractual services, maintenance, computer equipment, salt, travel. things like that.
Yes, I see it. Thank you.
Mr. Neal?
Thank you, sir. Looking at page 3, this part that says cash balance, is that what reflects our cash reserve?
Yes.
Yes.
Yeah, I thought we moved $5 million into our cash reserves. It's just showing 9 for, shouldn't we?
Yeah, it's a little under 5.
Is that because we didn't move 5 into it, or did we dip into our cash reserves that we're at 5 point something? Why isn't there $10 million in the cash reserves?
We had, at the end of 2017, we had expenditures that were slightly higher than what we were anticipating when we said that we were going to get to 10, and we ended up with about 9.8 in cash reserves.
Okay, that leads to my next question, because when we took the $11 million for the cell towers, we took $6 million from that to pay off operating debt.
To pay off what?
I was told it was that we use it to pay off operating debt?
Well, operating expenses.
Yeah, it wasn't debt.
Okay,
yeah.
so, well, that's operating expenses. So in actuality, we took more than $6 million. We took 7.
Probably less than 7, but your theory is right.
Okay, so can you, just for our edification, can you let us know, if we were to look at these numbers, what did we pay off? And is there, I use the term debt thinking that we paid off something that we owed and it wouldn't come back. So if it was operating expenses, where were those operating expenses that we were off by almost $7 million? And do we anticipate those things hitting us again in 2018? So if we were to look in this report here, where would we find that $6 to $7 million that we paid off with this cash sale from the cell towers?
I guess I'm a little confused with your statement, because initially you said we had talked about we were going to use 6, but we used closer to 7. So are you asking us to explain where the 7 went, or where the additional $1 million went?
Okay. It's one thing, the 7. I thought it was 6. So where the total 7, where did that go? Because, I mean, all of us were under the understanding that we now had $10 million in cash reserves. So, and we're projecting to dip into that again for 2017. So that, you know, that's a concern, because we've sold that asset that was bringing in $500,000 a year. So we don't have that $500,000 a year coming in anymore. And we don't have too many more assets to sell to. So where's the bleeding, I guess, is what I'm asking.
All right, again, we were looking to be closer to 10. We're at 9.8, so I think that is still really close to 10, but we'll go back and look.
Okay, but can we, because we had asked this question when we made the sale of the cell towers, that we get an understanding of where that $6 million was going. So we still don't, can we get a report on what do we spend that?
We spend it on, again, general expenses in the general fund. The bulk of the expenses in the general fund were salaries and benefits. So without looking detail, I can tell you it went to pay salaries and benefits of the employees in the general fund.
Okay. Can we have a definitive on exactly where that money went? Or are you saying that's where it went, salaries and benefits? So I don't think we, because $7 million for salaries and benefits, it's not like we're going to cut that many people this year. That means we're going to have another $6 to $7 million deficit this year.
I don't think that's the case.
Okay, so can we get a definite on where that money was spent, please? Because I know we asked that question back when we had the cell towers, and we were supposed to get that information. Then the other question I have, Mr. Chairman, when we were looking at the steam plant, as far as categories, I know that was where are we now with the revenue on that? The revenue that brings on, because it used to be a liability to us. Now it's an asset because it's bringing in revenue. I understand. Where would we find that?
You won't find that in the city's accounts.
Okay. So where would we wouldn't find it anywhere?
The steam plant is in a separate fund, not in the city accounts. And again, we can get your report on the STEAM fund, but again, you won't find it in the details we have before you today.
We won't find it in any of our accounts?
Not in the details we have before you today.
Okay, so we'll find it, it'll be reported to us on Tuesday, Wednesday, or Thursday?
If you talk to the service department, I'm sure they could get that. If not, we will provide something separately to you.
Thank you, Mr. Chairman. Thank you.
Thank you.
Yeah,
Mr.
I'd just
Swirsky?
like to add that I'd like to see some accounting on the steam plant finances also. Yeah. Hope that you, Ms. Dawson, can make sure it happens one of the days.
Again, I will talk to service.
Okay, thank you.
Ms. Sims?
This may just be a simple mathematic. So when I look at the revenue, and then I look at our expenditures for 2018, is there a shortfall of just under $1 million?
That is correct.
And there was, for labor, there looks to be like $5 million increase. So what is that why there's a short?
That is, a portion of that is from the 2.5% wage increases that all city employees got, and another portion of it is from, there's a number of police officers that last year were charged off to two grant funds that this year are on the general fund. So those 22 officers, their salaries are reflected in that 77 million, but they weren't in the 72.
So how do we cover the $1 million?
Our goal is to improve revenue and to work on reducing expenses. Again, this is our budget plan as of today. We're continuing to work with these numbers to make sure that the draw on general fund is a lot less than what you're seeing today.
I think that's okay. Thank you.
I mean, again, our goal is to have a balanced budget. So we'll be working every day to get to that balanced budget.
So when you bring even a budget summary in, if it's a quarter, maybe 250,000, but we're talking about nearly $1 million, it seems to me that we'd have kind of worked that down a little bit before it got here.
We have been working.
So if it surprises me to see that there's nearly $1 million shortfall, it shouldn't surprise you that I'm surprised.
No, I understand that, but again, our goal is to beat the budget that we have here today. But again, this is just our current plan. We're going to be looking at revenue wherever we can, increase it where it makes sense, and we'll be continuing to try to control expenses.
Okay, the next page, just briefly, and this is, we've had this slide in the past couple of years. It just shows the distribution of our revenue and expenditure sources for the general fund, and obviously we are heavily reliant on our tax revenues. That's about 69% of our general fund. Less reliant now on local government, as that has been cut in half by the state, so it's a much smaller percentage of our total revenues. And on the expenditure side, again, we're very, it's labor-centric for our expenses, especially with our safety forces in the general fund, so that's our primary expense in the general fund is labor.
Mr. Neal?
Thank you, Mr. Chair. I wanted to piggyback on Councilwoman Sims' question. This really goes back to last week, because we're about a $1 million shortfall. But last week we approved 320, almost 400-something thousand dollars to pay for something for Stowe, the 911 call center. Now here we're projecting that we're a shortfall. We're paying for something for another city. And the question was, when would they pay us back?
They were paying 100% for the costs that we were incurring for that.
But we're paying upfront costs. They're paying us back in 2018? Yes, within 60 days. Within 60 days?
So it'll just be an in and out.
Right, and it's not in the general fund, it's actually going to flow through one of the capital funds.
I appreciate it, but that kind of, when we're told it's not in the general fund, we're trying to keep track of where our city's expenses are. It's kind of hard to follow all of this, you know, when we ask about different things and it's not in here. So do we really have a shortfall? Is there another fund that's covering? If we brought all these different funds in and then we looked at them with this report, would we still be showing this $1 million shortfall, or are those other funds going to cover this?
Our other funds cannot be used for general fund expenses.
Okay, but I guess in the grand scheme of things, with everything that the city has to do, because these other funds, if they can't be used for the general fund.
I mean, we have other funds for specific purposes.
Such as?
Water, sewer.
Okay, so, but some of the things that we do in the general fund, you're saying, because we have like utilities, things that are, expenses and things that are in here, water being one of our main utilities.
Right, but we can't use water revenue to cover a shortfall in general fund.
That I understand.
Okay.
But if this right here, if the utility expense is associated with water.
It wouldn't be in the general fund.
None of these are, so.
Correct.
These utility expenses are just what we're paying out to Ohio Edison.
Those are for the electric bills at our recreation centers, things like that.
Okay.
But again, keep in mind, we've been working with our departments for the last, I would say, 4 to 6 weeks, trying to reduce the expenses in the general fund. And we will continue to do that. But at some point, we needed to put a pin in the paper and submit a budget to council.
Well, just, I know we've had these conversations over time. You know, about $1 million shortfall. So if the dollars that we write off, when we were talking about the amount that we write off each year for the water bills, which was about 1.2 that we write off each year, and then we have revenue coming back, none of that is reflected in this.
No.
That's all in the water fund.
Correct.
I think last year, as I recall memos from the mayor, you're asking departments to do what, 1.5% cuts?
Yes, grow revenue by 1%, decrease expenses by 1%. But again, we went back to all of the departments. I mean, they've been working hard to come up with ideals how we could generate additional revenue. So a lot of the ideals that we have are not represented today.
Understood. They'll be coming forth.
They will be coming forth. But again, I keep in mind this is a plan. We do recognize there is a shortfall, but again, we will be working the rest of the year to try to get those numbers closer together. I mean, that is our goal.
Just have a question, Mr. Chair.
Mr. Moby?
On page 4, if we add labor and fringe benefits, that would tell us what percentage of the budget is for personnel.
Yes.
Correct.
So that's 71%. Is that low, high, or about the same?
It's about the same as what it's been.
Okay, because I always thought it was like 75%.
Yeah, it's about the same, and it just depends on how big the budget is, to be honest.
Okay. Where would we find, I know in years past, we've asked, well, now it would be Human Resources Department, I guess, the compensatory time that people would build up. We've asked people to manage that much better in terms of getting people.
I apologize, I didn't hear the beginning.
Oh, I'm sorry. In the past, we've asked, and I guess it'll be Human Resources, I'm assuming, to help people manage their compensatory time, their comp time.
Yes.
Because I know a portion of that you pay out if people leave. How are we doing there? And where would it be represented in the budget?
That would probably show up in the, I guess, the benefits piece. But we recently put out a new policy for managers and for assistant law directors, where we're looking at capping the time that they get paid out. Again, we won't see a lot of the effects of that in 2018, but in future years, we believe it will save us money.
What do we cap it at?
You will be capped at, if you're an existing manager and you have over 600 hours, it'll be capped at where you are as of March 3rd. If you're a newer manager and you don't have 600 hours in your paid leave bank, you will be allowed to accumulate up to 600 hours. All of the hours you accumulate at over 600 hours will be paid out at 25%. The 600 will be paid out at 100%. Again, that's a new change that we're just implementing. But it was one of the concerns that I think the Blue Ribbon panel had with the city of Akron.
Because that can be a lot of money.
It is a lot of money. And we are looking at, again, ways to reduce some of the expenses that we have.
Do other cities have something similar?
It is similar, but I don't know if it's as generous as ours is.
And why are we being so generous?
A lot of it had to do with some of our older union contracts, to be quite honest.
Okay, thank you.
Okay, page 5 shows an overview of the anticipated revenue across the various funds that we have here within the city. So I'm not going to go into all of these in detail. This is all, we will be covering all this as we go through the budget hearings. The bottom line is we're expecting around $600 million in revenue in 2018. And likewise, on page 6, these are the budgeted expenses for each fund. And again, we'll be covering all of this as we do the 3 days of budget hearings, and we'll have the detail behind all of the anticipated expenditures in each of these funds. And then finally on page 7, this is a quick look at where we are with our full-time staffing, both within the general fund, which is shown at the bottom, and then for the city as a whole. So in terms of our full-time staffing for the city, at year-end 2017, we were at 1,821 employees. So that represented an increase of about 30 employees that occurred throughout the year, and a lot of that was within the safety forces. So we did hire safety forces in 2017. So they were at a little bit higher levels than they were at the end of 16. We're budgeting 1,913 positions. That's the same amount that we had budgeted for 2017. So they've been redistributed somewhat amongst the different departments. There's more in safety, less in some other areas. But the bottom, the final amount of full-time employees remains the same at 1913. That's what's budgeted. As I mentioned last year, typically a city of this size, typically has a number of vacancies that exist at any given time. Right now, we're at about 80 to 85 vacancies within the city, and that's a pretty typical number for us. We will be examining all of the vacant positions that come up, and unless there's special circumstances, a lot of those will not be filled in 2018. We are looking to leave vacant a number of positions due to the budget that we have before you.
Okay, good. And we will, I think throughout the week, we're going to have to, as far as the different categories, we'll need to constantly refer back to this, so. Oh, I'm sorry. Sims?
Thank you, Mr. Chairman. Okay. The picture got a little scarier as I got to the back of the book because it looks like it's $18 million shortfall.
The bulk of that is in sewer, though, if you flip back.
Right.
Okay.
So it's going to be in sewer, and we're going to be spending down our sewer fund balance.
Oh, that's okay. I feel a little better.
Yeah.
But here's another question. So part of the covering some of the shortfall, I know you talked about some fee structures that haven't been adjusted in the last
20 plus years.
20 plus years. Do you know offhand what some of those are?
She's mentioning parking as one, but there are like things in the Treasury Department that haven't been
Right,
adjusted.
a number of our licenses that we've had for a number of years, and we have not adjusted those amounts.
Recreation fees haven't been adjusted.
So this is my concern is, what a wonderful state of the state address we heard last week, but we also heard 57% of folks living in Akron, I think, live in poverty. And so I hope as we think about what these fee structures are, that we're bearing in mind. I don't know how much more people can really take.
No,
So-
I appreciate your
Thank you.
comments, and again, we'll be looking at a balanced approach, because our goal is to cover our costs, though.
Continue to proceed? Are we good?
I think we're good. That
Okay.
concludes the presentation of the executive summary. If there's any other questions, again, we'll be distributing the PDF files this afternoon to your mailboxes. And as I mentioned, they will have, links that we can jump right to specific areas within the budget.
Very good. So we will adjourn until 3 p.m. tomorrow. Thank you.
And somehow, we will be ready to